Hey guys, Kent here. So expenses or deductions, this is how we save you money on taxes in general, right? At least at the beginning, when we first open up a company, one of the main ways to save money is to look at the different expenses that you can get. Now, this deductions guide goes through these different expenses, right? I'm going to call them deductions. I'll quit using the word expenses, but they're the same thing. Okay, so like I talked about before, the income that comes in, okay, minus the expenses, that's what's left over as your profit, and that's what you get taxed on. So if you have $100,000 minus $40,000, okay, of expenses, then you only pay taxes on the remaining $60,000, which is really, really nice. Now, one of the cool things about companies in general is there are a lot of things that you can do every day that as a business owner you can count as expenses legitimately for the company and will help you save a lot of money. Now, I'm going to run through these different pages. If you've seen this is going to be a decently long video. Okay, watch it on 2x speed if you want to do that, or jump to the specific sections that you want. I'll keep the guide moving along with my talking. So jump to the specific one that you want to see. We'll also continue to do videos where we'll put up more detailed descriptions of different videos, or excuse me, different deductions. So here we go. By the way, quick overview. I am a lawyer. A lot of you are my clients. This is a general video, okay? This is not specific legal advice for you or your business. So just remember that, right? If you have specific questions, of course, reach out to us. Go back, service@kentsavagelaw.com, 801-899-9634. All right, let's get into it. We're going to go over some of these different deductions, look at it, and you can, again, jump ahead to any ones that you're interested in. The first one we're going to talk about is the home office. Home office is a deduction that anybody can take. Even if you have an office that you drive to every day, that you commute to, you can still have a home office if it's an administrative, what we call an administrative home office. And again, we'll get more into that in a separate video, but just know that that is an option for you. So the home office deduction, this is a specific deduction that you get to use because you have a room in your home that's dedicated to your office, or a space in your home that's dedicated to your office. Now, this is always going to be based off of the square feet that you are using. Okay, so there's two ways to calculate it, and you're going to do the one that's better for you. Okay, not the one that's worse, the one that's better. Okay, so if you have a room that has 300 square feet, you can multiply that by $5, or whatever the square footage is. It doesn't have to be 300 square feet. Whatever the square footage is, 100, 200, 300. We multiply that by $5. The resulting number, whether that's $500, $1,000, or $1,500, that resulting number is how much you can deduct for the home office under the simple method. Okay, so the simple method is simply square footage of the room multiplied by $5. Whatever the dollar amount is, you get to take that as your home office deduction. Okay, so on your P&L, this is income minus home office deduction, right? And that's how you show that as an expense. Now, there's another way to do this, because the simple method caps out at $1,500, which that's not a ton of money. The actual calculation method is a little bit different. That's where we take the square footage of your office as a percentage of the square footage of your entire home. So for example, and I'll just use it straight from here, you have 120 square feet, which is very common, right? A 10 by 12 room. 120 square feet as a proportion of the home. So if you have a 1,200 square foot home, that's 10% of your home is your office. So it's 10% of your utilities and your maintenance. You get to count that as an expense for your office. So 10% of your heating bill, your water bill, your cooling bill. I should just say electricity or gas. Any of that you get a deduct. Okay, or another example, your roof or your water heater breaks, like mine just did and flooded my entire basement. Okay, replacing the water heater or replacing the roof, we get to take whatever percentage, right? 10% or 12% or 20 or whatever that percentage is of the ratio from our home or from our office to the home. Okay, so pretty straightforward. Now, rent can be included in the actual calculation method. So I have some clients who pay $5,000 a month in rent in San Francisco. So number one, dang. Number two, go ahead and, if it's 10%, you get to take $500 a month. There is no cap on that, okay, for rental. Mortgages are not the same, okay? Mortgages, you do not get a double dip. Well, I say double dip because mortgage has a mortgage interest deduction that you can use on your personal taxes. You don't get a quote unquote double dip by using it on the personal side and on the home office side. So just so you know, it's only there for renters. I'm going to talk about office expenses, and by office expenses, I really just mean general deductions. I'm giving examples of office expenses, but this often gets confused with the home office. It's not the home office, okay? There are specific expenses that are ordinary and necessary, and those are the words of the IRS, okay? So this is actually it's actually words of the tax code, but this little blurb is from the IRS's website. That ordinary and necessary is from the tax code. But this blurb is from the IRS's website. Note that ordinary and necessary does not mean indispensable, right? It doesn't mean that just because you don't have it, your business could still function. But they are things that are considered to be necessary to keep your business running. So for example, your internet, you absolutely need internet, right? So you can deduct the internet. Now, I've got a lot of people that have heard that you can only deduct a portion of your internet. No, that's not true, okay? You get to deduct things exactly like big companies deduct things. So let's say that Google, okay? Google has internet, and just because Sally is sending Bobby pictures of her cat on the GChat or whatever, right, during work, Google doesn't, they still get to write off the internet expense. Okay, it's the same thing for you, right? If you're using the internet for your business, you totally get to deduct it. There are other things that will get split. Again, like the home office deduction, you don't get to deduct all of your utilities, you just deduct a portion of your utilities. But for these types of expenses, the ordinary and necessary ones, for the most part, you get to deduct them fully. So internet, you absolutely get to deduct. Cell phones, you also get to deduct. You can also deduct cell phones of advisors, and we'll talk about advisors in a little bit. Especially, yeah, we'll talk about advisors coming up here. But partners, other people that are using cell phones, we get to deduct their cell phones too. So a spouse is often an advisor or a partner in a business, so we get to deduct your spouse's cell phone as well. Land phones are a little bit different, just FYI. Computers, absolutely, you're using your computer for your business. Furniture, specifically for your business. There are some nuances with that, by the way, but in general, furniture you get to deduct. TVs in the office, a lot of my traders out there, you guys are watching the tickers, right? You need a TV, you need a subscription to be able to watch the tickers, and that's absolutely ordinary and necessary for your business, no question. Decorating your office, that's ordinary. You can have decorations in your office. I have these little plants that are around my office that I don't water as much as I should, okay, but it's absolutely normal to have those. So those can be deductions if they're in my office. Couple extras to throw in here. Pre-organization expenses. These are expenses that were ordinary and necessary, but they were before your business was actually set up. So a lot of times people say, hey, I took a bunch of classes to do real estate, or I took a bunch of classes to do trading. If it's within the last 12 months, we can actually count it. Now, there is a little bit of an issue that it gets capped at $5,000. So we can only take $5,000, but we can count your internet, we can count your tickers with the TV, or we can count your computer, other things like that you spent money on in the last 12 months. We can totally count those as expenses, and really any other expenses that are in here. With a couple exceptions, we can usually count those up to $5,000. The cost of getting your businesses formed, by the way, that does not, if you pay your attorney, what's up guys? If you pay your attorney to set up your company, then that's not a pre-organization expense, even though technically you paid them before it was set up. Let's talk about food, okay? Food is actually really cool. We've, at the end of last year, they brought food up to be a 100% deduction. It actually was only a 50% deduction for a few years there, which is really nice. They're trying to stimulate the economy a little bit, stimulate restaurants, get business owners to get back out and eating at restaurants again. So 100% of meals that you have with another person outside of your office, that as long as they're related to your business, and I'll talk about that in a little bit more depth in a second, you can deduct those meals. Or meals that you bring into the office for employees, those are deductible, or meals when you travel. And we'll talk about those as well in a little more detail. Now, the types of people that you can have meals with, okay, they have to fall in one of a few different categories. One category is that person has to be a partner of your business, okay, or it has to be a client of your business. It can be a future client or a potential client of your business. It can be a service provider. So that's like me. Hey guys, let's go to lunch. Okay, that or an advisor. Okay, an advisor to your business can be anybody who is helpful to your business or gives advice to your business. Now, my clients, they get a list of advisors where you can create that list. You can add to that list. You can take away from that list whenever you would like. You can create that list of advisors, and those people you can go to lunch with or whatever, and you can deduct that meal. Those advisors do not have to be someone even in your field. This is an example I've been giving to traders a lot lately. Let's say basically anything can affect the market with trading, right? So if you talk to someone about their specific field and how that's going to influence, they're telling you things and you think you can you can see ways that that's going to influence the market, absolutely. That's helpful to you in your business. So that can be a business deduction, right? So it's not like, hey, let's talk about my business. You don't have to do that. It can be way less formal than that. You can say, hey, Dr. Bob, tell me about your business. Tell me what's going on. How are things going? And he can say, man, it's crazy, Corona, or hey, it's crazy, I don't know, heat stroke. Okay, whatever it is, if we can see how it affects your business, then absolutely we can count that as a business meal. Now, with your spouse, okay, your spouse is going to be your biggest advisor. So if you have a spouse, you guys are going on a date night. I had an anniversary with my spouse. We talked about our business because we do all the time, and we actually talk about some legitimate stuff for the business. Absolutely, yes, it's an anniversary. It's romantic. We have a nice meal, but absolutely we can also deduct that as a business meal. Okay. Celebrations. You can have celebrations, guys. You can celebrate specific things, and you can deduct for those celebrations the food. By the way, bar tabs or tips or the taxes, those are all included. Now let's talk about best practices really quick. Yes, the best thing to do is save a receipt. You only need the receipt if you get audited, okay? But it's good to have the receipt for your records and also for your profit and loss statement, right? If you have credit card statements, yes, use those, right, to help you do your profit and loss statement where you're saying, hey, here's my income, here's the meals that I spent, or the money that I spent on meals. Let's talk about mileage. And I'm also going to touch on mileage, guys. I'm going to talk about actually putting your car in the business. I'll just touch on it a little bit because not everybody needs to do that. Sometimes it makes sense, but I'll touch on that a little bit after we talk about the mileage in general. Every mile that you drive for your business or that can be counted as business mileage is a 56-cent deduction for the year 2021. If you're seeing this after the year 2021, that's probably pretty awesome that you saw it, but also it's going to be a little bit different, right? Every year is a little bit different. They change the mileage rate, but for 2021, it's 56 cents per mile. Your miles can be anything that's related to the bit, well, ordinary and necessary, right? Miles that are ordinary and necessary for your business. Now, there are ways that people overlook this all the time. So all those business meals that we just talked about that you're going to be going to, the miles to and from those business meals, absolutely those are deductible, okay? If you're running errands for your business, those miles are deductible. And let me give you an example. Let's say you're going to Costco to grab toilet paper, okay? Everybody wants to go to Costco to grab toilet paper because you can buy 3,000 rolls at once, okay? So you're going in there. Let's say you walk in and you see the computers. You see the printers and you're like, you know what, I'm going to go check those things out. I'm actually interested in getting one of those or seeing what the prices are in those. If you're legitimately looking, like you're legitimately going over and checking it out, that's research or doing shopping, right, for your business. That's a real errand. And That doesn't mean you have to necessarily buy that computer, but if you're looking at it, or you're looking at the office supplies, okay, that's a legitimate expense for your business, or a legitimate trip, right? That we can count the miles for your business. So you'll notice that as a business owner, you do this all the time, okay? You're going to walk in and you're going to be like, oh, you know what? I'm going to check that out. And absolutely, we can count that towards your business. And again, people don't realize that. But again, we want to think broadly. What types of things can we put in there? Those are totally things you do normally for your business. So you can start to count those miles. Now, counting miles and putting that on your profit and loss statement, okay? You want to be able to actually add up the real miles that you took. The best way to do that is to do a log. If the IRS wants to look into your business, or do an audit, they're going to look at your log, okay? A log's actually not that hard to create. Use an app. MileIQ is the one that I use. It's awesome. Okay, every time I get in the car, my GPS follows me where I go. And that might sound sketchy, and if it sketches you out, use a pen and a paper, okay? But the MileIQ app is going to follow me, and it's going to say, hey, you just drove somewhere. Tell me, was that a business trip? And if so, what was it, right? And you just click and say, yes, it was, and then you're going to say it was an errand. And it creates the log for you, and it adds everything up for you, and it's legit because you've calculated the routes. It's really cool. So MileIQ, highly recommend it. Check it out. Now, I want to, and by the way, if you get audited again, you show them that log, and the IRS can be like, oh, sweet, nice, thanks, and they'll move on. Now, a couple thoughts here. As far as putting a vehicle actually into your business, you can totally do that. A lot of people say, no, you can't do that, or hey, it's really risky to do that. No, it's not, if you do it right, okay? The vehicle is supposed to be used for your business, or partially for your business. If you use it 50% for your business, you can put half of the expense of the vehicle as a deduction for your business. Talk to me, call my staff. We can talk to you about this and see if it's something that actually will work for you, okay? But sometimes the miles are better, because if the vehicle's not heavy enough, you have to have if it's over 6,000 GVWR, then you can, in some instances, deduct the entire amount of the vehicle in 1 year if it's actually being used for business, which is awesome. That can be an incredibly great deduction. If not, we have to do it we have to do it through 5 years, over 5 years. Let's try that. You have to do it over 5 years, okay? And sometimes you're going to get more mileage deduction than you are by actually putting the vehicle into the business, but you don't get to do both. You get to do one or the other, okay? Now, if you're counting the vehicle itself, then you can also count the other things that go into it. You can count gas, you can count maintenance of the vehicle, changing tires, all that kind of stuff can be added in there. Mileage, the idea is that rate already counts that in there. It takes all of that into account. Okay, so we get to take one or the other. Again, we can talk about that specifically if you want to talk about it. Just let us know. Travel. Travel is a really cool deduction, because we get to deduct a lot with travel as long as the travel is legitimate. So I want to talk to you guys again about how to make your travel legitimate business travel. Okay, but first let me tell you the types of things you can deduct. If you're traveling and it's a business trip, for the days that are related to the business trip, which we'll get into in a second, you get to deduct your actual flights or your driving, right? If it's your own car, you can deduct the miles, or if it's a rental, you get to deduct the expense of the rental and the gas that goes along with it. But you get to deduct getting there. You get to deduct your hotel when you're there. You get to deduct the food. Okay, so it adds up really, really fast when you're actually traveling for business. So how do you travel for business? Okay, well, any trip that you go on, as long as 1 day of that trip is related to your business, then the expense of getting there and the expense of getting back can be counted as a business trip. Okay, so we look at this by day, right? And I'll give an example of a week. We're going to go to Hawaii for a week, and that will be our little example that we're going to play off of. Okay, so if you have a seminar on Wednesday, okay, but you're flying out on Monday and you're flying back on Friday, that means that your seminar day on Wednesday is a business day. So your hotel, your food, that's all going to be part of the business expense, okay, for your business. But getting there on Monday and flying back on Friday, you got to get there and you got to get back. So those are also business days, okay, even though you're not going to the actual, you're not going to the seminar on that day. Okay. Now those other days, the Tuesday and the Thursday that you're just chilling on the beach, that's not business travel. Okay. That's not a business day, but go ahead, chill on the beach. That's okay. If you don't get every day, that's fine. Okay. But let's talk about ways where maybe you can get a few more days than you think. All right. So there is a tradition of flying somewhere nice and warm. If you're like me and you're living in Utah, flying somewhere nice and warm for your annual meeting for your business. And again, guys, if you're my clients, you get the annual meeting documents. You have the travel documents. We'll give you the resolutions to do the travel and keep the minutes for your meetings. But if you travel to have your annual meeting, that annual meeting day, that's going to be a business day, right? And traveling there, business. Traveling back, business, right? And then you can lay on the beach the other days, enjoy it, okay? But I have some clients who do such a good job at creating really great experiences through their families, for their families through their business. And let me give you a great example of this. So I have certain clients that will go every year, they do a retreat, and it's for their business. And part of this is their annual retreat where they go and they have their meetings for their business, and they go to Hawaii and they fly out on the first day, and then on the second day they actually have their annual meeting and they sit down and they talk about, hey, what went well this year, what could we do better. The next day they bring their family in and they say, all right, family, let's do this. Let's talk about what are new ideas for our business. What types of businesses do you want to get into? And it becomes this training ground for their family where they're teaching them that spirit of I can't even say the word, of being a business owner, entrepreneurship. They're teaching them the spirit of entrepreneurship. They're teaching them how to have that mindset of growing a business, because it's not easy. And they're showing them kind of the pros of that, and they're teaching them that. And then I'll have them the next day after that, they'll talk about, hey, let's talk about giving back to the community. How can we use our business to actually give back to the community? How can we give to charity? What charities do we want to give to? How do we use these blessings that we have to bless other people's lives? And it's really cool. Okay. So you can do that same thing, right? You can use your business to, not only make yourself money, but also use it to be a teaching tool, a training tool for your family. And if you do that, you can absolutely count that as part of a business retreat, right? Because that's a legitimate reason. It's ordinary and necessary to train the people involved in your business, or to have those advisors be part of your business and teach you things. That's another cool little thought. You can pay for your advisors to come and meet you and travel. You can pay to go meet advisors. So let's say it's Thanksgiving, okay, and you're flying over to Uncle Joe's house and you're going to have Thanksgiving dinner with Uncle Joe. Well, if Uncle Joe can be counted as an advisor, because we're going to talk to him about our business. And again, let's keep some notes on that. Like traveling meetings, I like to keep notes. And again, we've given our clients the documents so that they can have the minutes or the notes from those meetings. But you're going to meet Uncle Joe, and then you're going to have Thanksgiving dinner, right? And that's going to allow us to count our travel. Now, again, if you don't get every day, that's okay, right? But we're going to try to maximize our days. One quick additional note. Weekends, okay? Weekends are counted as business days as long as you have business on Friday and on Monday. So this is actually really cool. The IRS is very much an old boys club, right? They do not work on the weekends. They don't work on Saturdays. They don't work on Sundays, and they don't require you to do that either. So if you're in Hawaii, okay, and you have your meetings on Friday and you got your meetings on Monday, those business days where you are, or those 2 days in between, excuse me, where you're laying out on the beach, guess what, guys? Business days. You get to count them. You get to count your hotel and your other expenses, because you got to be there over the weekend. Okay, so that's a cool little extra that you should be aware of when it comes to travel. Let's jump over to the next, which is paying children. There are lots of nuances to this one, guys, and a lot of good and bad information out there. I'm just going to cover the basics. If you have specifics that you want to talk about, let me know. If your kids are under 18 years old, you can pay them up to $12,400 a year. It's actually a little bit higher now, but you can pay them about 12,500-ish, and you don't have to give them a W-2 for that, and they don't have to report that income. So what that allows you to do is it's an expense for your business. Now people will have their kids shred documents. They'll have their kids do lots of other different things to count them as business expenses. A lot of people say, hey, can I take pictures of my kids and pay them for being models? Of course you can. You totally can. If you have a product that makes sense for. Okay. The other thing you can do is you can train your kids. So remember how I was talking about that with your travel, right? You can train family. So if it's the summer and your kids are at home and you're working at home, have them come and audit you, train them a little bit, show them the ropes, or show them how to type, right? Get them some typing lessons where they can type and be better, and so that they can actually help you with your business. That's a totally legitimate thing that you can pay children for, is that training. Okay, you can pay them a reasonable amount of money, which again, if you want to talk about that, talk to me about it, and you can do it up to $12,400. Now, a lot of kids, we can actually get that full 12,400 or 12,500. Okay, you can totally do that. But let's just talk about it. Now there's little secrets here. I put, you can do the LLC. That's actually a really clean way to do it. Have another LLC that you pay your kids through. Again, if you're interested in that, talk to me. Children over the age of 18, I threw this in here because a lot of people are like, hey, how do I pay my older kids? Well, it's just like paying someone else. You can pay them money. Some people ask me, should I pay my kid by giving them a portion of my business? A lot of people will tell you yes. I'm going to tell you no, unless you specifically talk to me otherwise. I'm not a huge fan of doing that. Some people will say, hey, it gives you some protection with the business and some other stuff. Those people are usually not as right as you want to think. I like to take care of passing things on in a business or giving someone a portion of a business in a more official way. But not that that's bad, but just be aware of that. Now I'm going to go over a few last deductions, and these deductions are going to be they're going to be a hybrid between the personal side of the tax code and the business side of the tax code, meaning that we'll be looking at, again, how the business side interacts with the personal side, and these they work together. So the first one's going to be the Augusta rule. Now, a few of you, I'm going to actually jump here, a few of you have heard me geek out on the Augusta rule a little bit. It's named after Augusta, Georgia, where they have Augusta National, where they play the Masters every year. Okay, so thousands and thousands and thousands of people come every year to come and watch the Masters get played at Augusta National. Super high-end, swanky golf club, right? I think Bill Gates finally became a member after being on a wait list for many, many years. That's the kind of place it is. It's really hard to get into. People who get in are like presidents. Long story short, a bunch of rich people live there, or they have homes there. So a bunch of these rich people went to Congress and said, hey, Congress, we rent out our homes that are down there for the tournament, right? People come down, we rent it out to them. They pay a lot of good money to rent out our homes. And maybe they come a little bit before and they stay a little bit after, or they come during the year to check out try to see the golf course. So we would like to find a way to not have to pay taxes on that. So of course, because they're, old boys club, Congress said, heck yeah, let's do it. So Congress went ahead and they passed a law. And again, this is in the personal side of the tax code. It's section 280AG of the tax code. And it says, if you rent your home out for less than 15 days, so that's up to 14 days, right? So less than 15 days a year, you don't have to count that income as taxable income. All right, you don't have to count it as money that you have to pay taxes on. So again, this is the personal side of the tax code. So personally, you don't have to pay taxes on it. A lot of people, this is really cool. So if you live in Malibu and you got a mansion on the beach, or on a cliff, right? And if someone wants to film in your house, if they film for 14 days or less, then you get $20,000 a day 20,000 times 14, that's $280,000 that you don't have to have as taxable income. It's pretty crazy. There's no limit to this, right? Now, most of us, that's not the reality. We're not going to have $280,000, but some really smart guy set a great example for all of us. He wrote a letter to the IRS and he said, hey, IRS, I am going to have my business, instead of renting my home to a rando, I'm going to have my business rent my home from me. And then it will be an expense for my business, right? Or profit and losses, it's going to be an expense. And it will be income to me, but I don't have to pay taxes on it, because under this personal side of the tax code, it's under 14 days. I don't have to pay taxes on it. The IRS said, hey, guy, great idea. That totally, you can do that. They actually gave their approval to it. So this is something that's been going on for a long time. A lot of people don't know you can do it. Now, there's a lot of terrible information on YouTube. There's some really bad videos on this, especially people who are saying you can't do it. They don't understand the tax code, unfortunately. And so be careful at the info that you get it. We want to actually look at the tax code to see what we can and what we can't do. Okay, but basically any business can use this if they use it properly. There have been a couple tax cases about this. Long story short, based on some of those cases, we can get a valuation of your home for the rental, which is kind of based off of the hotels in the area, which is actually really cool. So you have 3 bedrooms, you have a family room and a living room, you can, a kitchen. We can say to a local hotel, hey, hotel, how much does it cost to rent out those same amenities, those 3 rooms, a couple office spaces where we can have these meetings, and hey, they need to have audio-visual equipment in there, and how much would it cost for food? You can do that kind of thing, factor that in, and that can be part of the rental expense. A lot of my clients are able to deduct somewhere, and this is a big range, but just bear with me. You can deduct somewhere between $750 to $2,000 a day, right? Depending on where you are. So if you're in San Francisco, a lot of times it's going to be more towards the $2,000 mark, or if you're in Washington, D.C., okay? Or if you're in the Midwest, a lot of times it's less, a lot of times it's around $750. It totally depends on your home. It totally depends on the situation. Now, we can rent your home out for all different types of meetings, right? So we can have advisory meetings, where you meet with your advisors. Remember, we have that board of advisors. We can do that. We have the documents, again, that we give to our clients so that they can do this and put that on their profit and loss statement. But it's an awesome deduction. So let's just split the middle just for an example. $1,500 a day times 14 days, that's $21,000 of a deduction. Okay, so it's a really awesome tool that we can use. And again, it's legitimate as long as we do it right. And we have that legal documentation to help you do it right if you're one of our clients. Now, QBI income, this is income from your business, but it's a deduction that we do on your personal taxes. So this is kind of cool. Now, there are some limits on it. Not everybody can use this. This is only for businesses that are considered pass-through businesses. So sole proprietorships, those ones of you out there who are filing Schedule Cs. And as a lot of you know, I actually, unlike other people, will recommend doing Schedule Cs. There are plenty of times where it's appropriate. There are S-Corps or partnerships. And again, LLCs can be all of those, right? So a lot of you have LLCs. You're probably one of those 3 things: a Schedule C, a partnership, or an S-Corp. Some of you out there are C-Corps. If you're a C-Corp, you can't use this. I'm sorry. And some of you are too rich, according to the IRS, to use this. So if you're single and you make more than $160,000, you can't use this. If you're married and you make more than $320,000, now those aren't the exact numbers. They're a little bit higher than that. So if you're close, let's talk about it. But if you're more than that, you can't necessarily use this either. But for those of you who are under that, after you do your profit and loss statement, we have your profit and loss from your business. This QBI is actually really cool. The QBI says, you have your business made 100 grand. We got rid of 40 grand of expenses. You have 60 grand left over. That 60 grand is flowing through to you. You get to automatically knock off 20% of that 60 grand that flowed through to you, whatever, came down to you. All right. You get to knock that off. And so that's really awesome. 20% of 60 grand. That's a pretty decent deduction. Okay. And we get to deduct that off of your taxes so you don't have to pay money on that. So it's really neat. One little side note for those traders of mine, this probably is only going to work for you if you take the mark-to-market election. That's a little bit of a nuance. So if you haven't taken mark-to-market, again, with our clients, we should have talked about this with you, and we should have decided whether or not that was the right thing for you to do. If you've taken mark-to-market, a lot of times we can take advantage of this, so just be aware. Now, charitable giving. I want to go over this, and again, this is part of where the personal meets the business, and here's why. Charitable giving is generally something that we do from our personal taxes. So a lot of you know that if you give to a charitable organization, whether that's the Red Cross or whether it's your church, okay, giving to those charitable organizations, you get to deduct that money. Now, that is a line item or an itemized deduction, as they call it, from your personal taxes, right? So the money that you give, you can have it be a write-off on your personal taxes. The issue we run into on your personal taxes is there's a standard deduction. And currently, and this could change, but currently the standard deduction is about $25,000 per married couple, and it's about half of that, $12,500, again, ish, for single or married people filing separately. Okay, so when you give to charity, let's say you're super charitable and you give $20,000 to your church or to the Red Cross, or again, wherever, that's a charitable organization, that's going to be a deduction for you. But if it's $20,000 and you're married, that's still less than the standard deduction of $25,000. So you would still pick that standard deduction. And for you, you would get that $25,000 standard deduction even if you didn't give any money to charity. So it's not helping you on your taxes at that point to give to charity. Again, there's great other reasons to give to charity, but the tax side wouldn't be one of them, unless you have an S corp or a C corp. Okay, other businesses, it doesn't quite work this way, but with an S corp or a C corp, you can actually give to charity, and it can be a deduction for your business. So this is really cool. If you're going to give that much money away, or any money, it doesn't have to be that much, you can still count it as a deduction through the business while still being able to take advantage of that personal standard deduction. Okay, so I like the charitable giving, and if you want to explore that further, again, feel free to reach out to us. Some final thoughts. These are awesome deductions. Again, look for those ways that everyday things can become business deductions, because that's what businesses are, right? You get to deduct things just like the Googles, the Amazons. You can totally deduct things. Think about, hey, if you're at a home office, if you're bringing things into the home office, think about it. What if I was a separate office? How would I treat that separately? And start doing those types of deductions that you can come up with. If you have any questions, feel free to reach out to us, or if you're interested in getting some of those legal documents to help you take those deductions and make them legitimate, reach out to us, 801-899-9634, or service@kentsavagelaw.com. As always, it's a pleasure. It's a pleasure to work with so many of you. Happy taxes.